Hey, welcome, guys. Happy Juneteenth. We are live. I'm Kevin Jefferson, aka the People's Lender, and today we're going to be speaking about a very important topic. The topic is Black home ownership, more so the importance and the impact of home ownership on the Black community. So currently, there are 46% of the Black community that has home ownership, which is 26% lower than our counterparts, white Americans, and a little bit behind the Asian Americans. Asian Americans have 62.8% home ownership, right? Um, so here on the People's Lender channel, just to be clear, we promote home ownership for all, right? However, I want to speak on the importance of Black home ownership and closing the gap and the lack thereof people wanting to purchase homes in the Black community, right? So the first thing is, for a long time, we had odds stacked against us. Banks were redlining us. They weren't giving us loans. We weren't seen as equals. We were not really able to own homes, right? So there was a huge inequality. Now that we have the opportunity to purchase homes, there's still inequality. Um, we may not make as much in wages, and a lot of us may not see the importance of home ownership. So, I hear a lot of stories and watch a lot of people come out and say, don't purchase a home. It's not an asset. You're better off renting. If you're going to purchase a home, purchase it as an investment. If you purchase it as an investment, the passive income can help you purchase your home later on down the line. While I agree with being an investor, if you're currently renting, you're paying a mortgage. You're paying someone's mortgage. It may not be yours, but you're paying someone's mortgage. My goal from this video is to educate us on the process, educate us on the importance of the process. And if you're not Black and you own a home, the same thing goes for you as well. Same process. This is just a topic that I'm going with at the moment, right? So, over the last 50 years, African Americans own less land than they did 50 years ago. 50 years ago, we owned more land collectively with less homeowners. So, what does that mean? At some point in time, we sold off our grandparents, great grandparents, land, and what did we do with the money? It may not be anybody here that directly sold the land, but why did we sell it for chicken change? Why didn't we keep it in our families and in our communities? And as soon as someone comes into the Black community and they don't look like us, oh, they're about to gentrify the community. Well, how did we get there? What did we not do? Or what can we do? See, we do have the same opportunity now. There's a ton of people out here who are legitimately providing great information on home ownership. And we're not taking the opportunity. Some of us are, a lot of us aren't taking the opportunity to take advantage of that. We feel as though if we don't get the McMansion or the house that we want, that we're not going to get it, or we're discouraged. Now, I do this on a daily basis. We do have obstacles ahead of us. One of the hugest obstacles that we have in front of us, especially Black women, is student loan debt. Black women are the most educated population. but they also hold the most student loan debt. So that is an obstacle, along with the disparity part of us not making the same income as our counterparts. All viable and legitimate reasons, right? But again, I tell you, I see this on a daily basis. We find the money and the credit to buy 2 cars. And I see car payments $700 and $800. And it's not just for us. It may be for our spouse. It may be for our mother. It may be for our children. And those things, along with student loan debt, kill your ability to qualify for a house. So then we walk away discouraged because I pay my bills on time, as well as I don't have any lates and I have good credit, but you have high debt. So I'm here to encourage us, get the car after you buy the house. Get the car after you buy the house. See, it's easier to get a car after you've purchased a home than the other way around. See, the house is the largest purchase you're going to make in your lifetime. The car is going to be second largest purchase, potentially, unless you got student loan debt, right? And let me break down to you what I mean. If you buy a car and that payment is $700 a month, when you go apply for a mortgage, you will be able to purchase $700 less a month for a house. I've seen that disqualify people with great credit. So we have to make a stand. We have to do better. And we have to learn the importance of home ownership. So I'm going to tap into why it's important to have home ownership in the Black community and the importance of getting the house before you get the car. If you need a car, see if you can buy something cash until you can get your house. Because what I know about people and our people, we are very resilient and resourceful. And we typically can come up with what we need. A house will allow for you to create a legacy for your family. If you don't have any kids, it still creates a legacy for your family. If you have nieces and nephews, godchildren, it creates a legacy for your family. So what it allows you to do is purchase a home. You can do once you own the home, you can do so many different things with the house, right? First thing is you can buy the house, live in it, fix it up as you go to updates and upgrades, as long as it's habitable when you buy it, and create equity in 2 ways: by improving on the house, but also by paying down on the house. And let's say a third one, if the market continues to increase, you're building equity in the house. So you have the first house. You buy the house, and let's say you pay $250,000 for the house. You stay in the house for 4 to 5 years, and after that 4 to 5 years, let's say that the property is now worth $325. You have $75,000 in equity that you've generated in 3 to 4 years. So you got 2 options. You can hold on to that house and use it as a rental property, and then you can buy a second house if your debt to income ratio and expenses and everything warrants you being able to purchase another home. Or you could refinance that home, take the money out, and buy an investment property. Yes, at the time, it depends on what your interest rate is. However, if your rate and your payment go up, you're doing it to create more income for yourself. That's a great way to spend your money. Now, if you came and wanted to refinance and do a home equity line of credit and you wanted to buy a car, I would probably talk you out of it, because you don't want it. Technically, when you do that, you're financing the car for 30 years. No, you don't have a car payment, but you're financing the car for 30 years. Essentially, that's what you're doing, right? So let's say you don't want to take that money out and use an investment property. You can take the money out, and then over time, you'll have the equity in the property that you can utilize, or you can sell the property, take that money, which is still equity, and use it to purchase another house. Mind you, the average person stays in their house 5 to 7 years. So in 5 to 7 years, you've built some sort of equity, one of two ways, either by paying down on that mortgage or the market appreciating, allowing for you to have equity in the property. So now when you go to buy that second house, you have more options. You have the ability to put down a larger down payment. And then that larger down payment may allow for you to purchase a bigger and better house. Now, over this time, you still want to be very cognizant of what you're purchasing. Because, see, we can spend money faster than we earn. What do I mean by that? If you buy a car and the payment's $700 a month, or someone puts a car, you get a car in your name for someone and it's $700 a month, is your raise or increase in income equivalent to that $700 a month? That's where it's important to monitor your debt to income ratio. I understand that sometimes we need a car, but we don't need 3 and 4 cars. I've seen people with car payments that are equivalent to a mortgage with a higher rate than what the mortgage would be on each one of those vehicles, but they don't want to pay 6.5%, 7% on a mortgage because the rates are too high. Your property is an investment. We're investing in real estate, and it's not a bank. If you get equity and over time it'll appreciate, that's great. However, if something were to happen and you lost, let's say you paid $250 for the house and the market went the opposite direction and now it's worth $175, yes, you've lost $75,000 in equity, but your mortgage payment isn't going to change unless the taxes and insurance increase, as well as you still need somewhere to stay. I had someone ask me, if the market crashes and my house is not worth what I pay, do I sell it? And my answer is no, because you're not going to make what you paid for it. And why are you going to dump your house? The market is reciprocal. It go up and down, up and down. If it goes down, you're still going to pay the same thing or more in rent that you were in a mortgage. So why let your house go? Continue to hold on to your house. So that's one thing. It creates generational wealth. It allows for you to be able to upgrade to an additional property. It allows for you to upgrade to a better home. And it also could, depending on your situation, it could allow for you to become a landlord and create passive income by renting out your first house. Right? So, hey guys, if you jumped on this live, we're talking about the importance and the impact of home ownership in the Black community. Very important. Very important. The numbers have dropped drastically. We're at the bottom of the totem pole. And my job and goal is to educate everyone on home ownership and the importance. But this particular topic is on home ownership in the Black community, right? If you have access to your grandparents' home, I don't care if it is 7 different heirs. Don't sell it. Try to buy your family members out. Come to an agreement on some price and see if you can purchase the property. Sometimes that's the easiest way in. I don't care if it's in an area where you don't want to live, you can still take that property and turn it into an investment property. And that's probably going to be the least expensive way for you to obtain an investment property because you have some ownership in it. It's so many different things you can do. You can, if you're on title and you want to buy everybody out, you can refinance it, keep your name on it. It's a little bit different than a purchase. You could potentially do a renovation loan on that property because you own it or your name is on it. There's so many different opportunities that you can have, but we have to stop selling and giving away grandmom and grandpa's house, big mama's house, big daddy's house. We have to figure out how to continue to keep properties in our name and gain more home ownership. And if you don't have anybody, so one of the statistics said 10% of 10% of black renters, only 10% of black renters can afford to purchase. Only 10% can afford to purchase, right? So now we have to put ourselves in a different position to be able to purchase. We should be trying to increase that number on being able to purchase a home. It's simple. It's a headache. It's tedious. It's hard at the same time, but it's very well needed. I know friends who purchased homes when they were younger, and what they did was they took the equity out so that they could pay for their kids' college. They also purchased homes when their kids were younger for each one of their kids, and they kept it so that when they graduated high school and they need to go to college, they could either have the rental income coming in and paying them while they're in college. They could sell the house to pay for their college if they needed to. So if we're looking to send our kids to college, another thing is high student loan debt and us not being in position to help our kids when they go to college. Because see, that's the other part of the American dream. So they say, is a college degree. And when I say college, you don't have to send your kids to college, right? I see people who have college degrees who make the same amount as someone without a degree. Now, this is not up for debate on whether you should or shouldn't go to college, but you can also send your kids to trade school. Either way, the housing market and owning a home prepares you or allows for you to be able to enable and help your kids. Okay, let's say you don't have any kids, you purchase a home, and you're at the age where you want to retire. Selling that asset or renting out that asset creates either more discretionary income or it gives you more funds to last to go along with your retirement. So there's so many different options that you can utilize with home ownership. We just have to get into it. We have to get into home ownership. So let's look at now. In the last 10 years, we have only increased the home ownership, or black home ownership, by a 40%. So yes, a lot of people got hurt, lost properties, lost jobs in the housing crash. Everybody got hurt. White, black, Asian, Indian, Hispanic, we all got hurt as a country. We got hurt. However, during that time, there were still opportunities. And I think we may not see the importance in home ownership. And you don't have to have the mini mansion or the big bad house. Start out with something and work your way up. Start out with something and work your way up. If interest rates are high or higher than normal, and you can afford to purchase, still purchase. You have the potential, and I'm not saying that you automatically can, but you have the potential to refinance and get a lower rate at some point while you own a home. Maybe 2 years, might be 7 years, could be 10 years. But as long as you can qualify, I would purchase a home. If interest rates decrease, then the market gets flooded and saturated with people who are sitting on the fence looking to purchase a home, and then housing prices go up. So you're going to pay either way, right? You're either going to pay for a higher interest rate or you're going to pay more for the house. So then again, if you pay more for the house and housing prices increase, then you may not qualify, or your reason is going to be, I'm waiting for housing prices to go down. If housing prices go down, that means the interest rates went up. So you see the cycle, like it's going back and forth, back and forth. Take advantage of the opportunity. When we pay 10, 11, 14, 20, 25% interest rate on credit cards and cars, we can pay 7.5 on houses. Don't let anybody try to discourage you from purchasing a home if you have to use down payment assistance. Yes, it's a little harder for the lender. Yes, there are some things that make it a little bit more tedious. Yes, you have to check all the boxes that they want you to, but you're using someone else's money. You're using someone else's money to purchase a home. Sometimes it's in the form of a grant. There's not a ton of grants. And if it is a grant or a state agency grant, you have to adhere to their rules because they're giving you money and they truly want to give it to the person who needs it. If you just jumped on this live, we're talking about the importance and the impact of home ownership in the Black community. Do me a huge favor, give me a thumbs up. Also do me a huge favor and hit that notification bell so that you want to hear me and I jump on live. You do. If you're listening to the replay and you have a question, chime in below because I do check my messages, sometimes more frequently than others. Depending on my workload, it may take a little longer, but I will get back to it. Again, we're talking about the importance of home ownership in the Black community, why we should take a look and buy, things that we should do in order to buy, and once we become a homeowner, then looking at strategies to purchase and own more properties, whether that's an investment property or that's working our way up to the property that we want to live in. And there's some great programs. FHA with as little as 3.5% down payment. You've got VA if you're a United States veteran and you qualify, 0 down payment. You also have USDA. 95% of the United States of America's land qualifies for USDA. You got to want to live in that area, and it has to qualify as well as you, but 95% of the United States land qualifies for USDA, which has a 0 down payment option. Now, 0 down payment does not mean you don't need any money, but your down payment is 0. And then you have regular conventional financing with as low as a 3% down payment, depending upon your credit score. But there are options. So many options. It's a lot of options. You've got bank statement loans if your tax returns aren't right and you're an entrepreneur. If you haven't done your taxes but you're an entrepreneur, you can do bank statement loans. Bank statement loans require a higher down payment, has a slightly higher interest rate, but it's an opportunity to get into a house while you have the ability to. And then after you get your paperwork together with your taxes and down payment or taxes, then you have the ability to refinance. I am going to jump into the questions section and see what we got. Mommy, yes, this is high. Freaking rent is ridiculous. Yep. And rents are high. So let me give you a little historical information. I've been in the business since 2004 on the realtor side and as a lender, right? And I have yet to see a period in time, even during the crash, where rents decreased. So that means housing prices in terms of rents aren't going to, they don't decrease. Occasionally, if something's overpriced anyway, it may decrease, but for the most part, you're not going to see someone charging $500, $600, $700 less in rent. You may see an increase in areas where rent is not, they don't have a cap on rent, but for the most part, rents aren't going down. And again, you're paying, when you rent, you're paying someone's mortgage. It may not be yours, but you're paying someone's mortgage. And I'm not saying it's anything against renting, but the goal should be home ownership at some point. Should be home ownership. I would venture to say if you are in a relationship and you're serious about getting with that person, I think both of you should consider purchasing a home before you get married. If you purchase a home before, if you purchase a home and they purchase a home, now you have two homes. When you make that unity and become one, you now can either do rent out his house, rent out her house, or sell both houses and buy another one, or rent out one house and then move in the other. So you have so many different options if you do it separately before you get together. So that's a great opportunity. If you're looking for investment properties and you're first time home buyer or never owned a home, FHA has an option where you can buy up to a 1 to 4 family, for 3.5% down payment. So you live in one unit, rent out the other 3. The people living in the other 3 are helping you pay for that mortgage. I would make sure I would put money to the side for incidentals, because now you're a landlord, right? It's not an investment property per se. When you talk to the lender, say, "Hey, I want to buy investment property," you're living in one unit, and the other 3 tenants or 2 tenants or 1 tenant is helping you subsidize your current mortgage. You only have to stay in that property for 1 year. And if you stay in that property for 1 year and you decide you want to move out, maybe at that point you've banked some of that rent to help you get a down payment to go towards your new house that you want. So that's an option. VA, you can buy 1 to 4 family with 0% down. There are some caveats. You do have to have experience in property management, and I believe that there's a way around that by hiring a property manager. USDA is single family, no down payment, and conventional is 3%. If you get into with conventional, if you get into multifamily, you're looking at putting down 20 to 25%. So FHA, 3.5% down payment, VA, to me would make sense. You know, if you're used to living a townhouse or apartment style, maybe you can do that for a year or 2, but you own the property and then you have more options to be able to get into something else. Hey guys, these are options. You know, if you're listening to this live and you have any questions pertaining to buying a house, jump on a call with me. Ask your questions in the comments. My goal is to educate people on home ownership and show them the importance. The statistic said, and let me make sure I get it right, the majority of Black homeowners are first generation home buyers. So no one in your family has ever purchased a home. As opposed to white Americans, they typically have some equity when they're buying a home, equity in a home, and they're trading up for an additional home. So if you're a first generational homeowner, because you've never seen it done, doesn't mean it can't be done. So hey guys, it's opportunities out here. I know we're listening to the news and what they talk about with interest rates, yet people are still buying. Big corporations are buying single family homes. Investors are buying single family homes. I know some people who are more interested in buying investment properties than they are owning a home. At some point, maybe they'll change that where their rental homes are paying for it, but the goal should be home ownership and not to be a renter for your entire life. Statistics show the more stable you are, the better you are off. If your kids are stable in the school district, they tend to do better in the school. If you don't have to ask your boss off um, once a year because you have to move, home ownership allows for you to get the dog you want. If your kids want a trampoline, it's just so many opportunities and things that there's some responsibility that comes with it. Maintenance, keeping up the house, making sure the utilities are paid, make sure the mortgage is paid. But tax benefits as of right now. So I think the good far outweighs the bad. Let's grab some questions. I'm gonna answer the questions on home ownership first, and then I'll get into the ones I see about credit. Is it ideal to refinance to enhance your home? Yes, it is. It is. If you're refinancing to make improvements to your home, that's going to be the cheapest money you can get to do it. And if you're enhancing your home, that's just helping create more value. So if you've got an unfinished basement, or you're updating the master bedroom and bath, or if you're updating the kitchen, that just creates more equity in your house. So if at some point you want to sell, you can, or you can enhance it to make or I don't know what happened, or you got married, then and you need more space, possibly making an addition. I purchased a home with my VA loan. I want to sell this home. I purchased for $219. How do I determine how much I have left? You should be able to call your mortgage company and get a payoff amount. They should be able to tell you how much you have left to pay off. Sometimes they show them on statements. It depends on who your mortgage company is, but it's a simple call to your mortgage company to say, hey, what is my payoff amount on my property? How, so hopefully that answers your question. And just so you know, when you sell that property, you can reuse your VA loan again. I'm not sure if you knew that or not. Trying to figure out is 7.5% interest rate acceptable for FHA in today's market. Whether it's acceptable, it's due to numbers work. So if you're qualified for a $300,000 house, if you're qualified for a $300,000 house and the interest rate on is 7.5%, you qualify for the house. Could you potentially get a lower interest rate? It's possible, but it could cost you, right? It's something called discount points. Discount points are equivalent to 1% of the sales price, of the loan amount. So you could potentially get a lower interest rate, and it may cost you 2-3 points on that $300,000 house. That's anywhere from an additional $4 to $6 grand, which that's a part of your closing costs. So 7.5% depends on where you're at, what you're doing, what mortgage company, if you're looking to pay points. But in this market, sevens, mid to high sevens. There are some companies, I'm not going to lie to you, that can offer you a lower rate. But what type of service do you get as well? Because I've been seeing people come back to me where they were offered a lower rate, but the actual loan officer couldn't get them through to the closing table because they didn't really know their specific situation. 7.5%, you could potentially shop around. If you want me to take a look and see what we can do for you, I will definitely, I could definitely do that. The link below to schedule a call or email me at teamjefferson@summitfunding.net, and that link will be below as well. Let me see. It says, same person. It says, I feel uncomfortable for some odd reason having a white mortgage broker and a white realtor being a first-time home buyer. I'm afraid I won't I won't know if they have the best interests at heart. Hey, look around. I can't answer that question because I don't know where you're at. However, I do know that I have the opportunity. I could take a look at what you will have and see what my company has to offer and go from there. So if you want to reach out again, grab a call or email me and we can set up a time to talk. I would love to see how I can help you. I feel you, Miss One, ready to buy a house. That's what's up. Let's get it. Yep, Kanisha, I understand looking to purchase your first home as well. Join. Thanks for adding value. Thanks for adding value. I applied last month, but the lender wants me to go to a credit repair, which are charging me more than actual collections account. My middle score was a 640. Was the middle score? I guess if the middle score is 640, I wonder what the issue is. So like sometimes it's more than score. It's things on your credit. I'm not against credit repair. You have to get the right company. I think it's an investment to put you in position. But if the credit repair is more than what the bill is, then that doesn't make sense. So I would potentially see, get someone else to look at it and get a second opinion. Sometimes there's more to it than we know. And sometimes other lenders don't give you all that information. So you don't even know yourself. You just know that they sent you to ABC Credit Company. If you want my team and I to take a look, feel free to reach out to us and we'll do our best to help you out. You're right, Ivory, you're right. We have to continue to educate our community, and we really got to start young. Are we going to be able to get everyone to convert to the home ownership mindset? No. But something that we have to get rid of is the renter mentality when we're going into home ownership. You have to become a homeowner. So when there's ownership, there's more responsibility, right? If you're sitting home and you're saying, hey, I'm tired of not being able to paint my room the way I want. I can't get my kids a dog. I can't have company over at this time. I'm tired of the other tenants parking in my spot. Buy a house. And it may not happen in 1 or 2 months. It might take a year, but at least try. Try. If you're not in a position, then you may know, hey, this is what I need to do to purchase a home. I've got people reaching out to me now, preparing for next year. I had a guy reach out to me now who was preparing for next year because he didn't think he was in position. Dude's under contract and closed this week. So you just never know. You just never know. Again, guys, if you're on this live and you have questions about home ownership, we're talking about the importance of home ownership in the Black community. We're talking about home ownership and the importance of legacy and generations. People throw out the topic generational wealth. So understand that generational wealth is not for you and your kids. It's for your kids' kids kids. You see what I'm saying? Like, it's continuing. Someone has to put us in position to start building wealth for people over and over. So right now, your mindset is for you also, but you have to think 2 and 3 generations down the line. We also have to teach our kids to think 2 and 3 generations down the line. And our kids have to, so that's how you're going to build generational wealth. Someone has to start it and teach the next generation who teaches the next generation. All this generational wealth stuff and having 50 million houses and not teaching our kids what to do with it, or showing our kids what to do with it, or thinking beyond our kids isn't going to help, because it's going to take that one generation to sell everything. And then the family is back in the spot where it started. Miss One, I've been waiting for 3 years because slow development in subdivision. Yeah, it's costing you money though. Think about it. If you had brought a house 3 years ago, it would have been less. And then when the subdivision's finished, you could sell the house that you're in now, that you would have been in now, have a larger down payment, and buy the house that you're going into. Just a thought, right? So sometimes we can't wait for subdivisions. We can't wait for the market to change. We have to act now. Take action. That's what's up, Miss Jones. Even though you don't have kids, you still deserve a home ownership. As long as you're alive, you need somewhere to stay. So, guys, if you join the live, or you just joined the live, we are talking about the importance of home ownership in the Black community. Again, this channel is for all people. I don't care what you look like, what color you are, how much money you make. This is to educate people. The specific topic is towards the Black community, to try to close the gap, and also educate my people on home ownership, the importance of home ownership, the key to home ownership. We definitely need to make sure that we're becoming homeowners and having the right mindset, positioning ourselves for home ownership. It's going to take some struggle. It's going to take struggle. It's going to take struggle in terms of mindset and financially to get in position, because there's going to be things that you want to do that you're going to have to cut out. You may not be able to have, and it's my term, I think I'm a trademark, second Christmas when you get your tax returns, right? If you get a bonus on your job, bank it, save it. If you get a raise on your job, as hard as it is sometimes, try not to increase your spending, right? If you're single and you get married and now you're in a 2 household income, don't look at it as, oh, I've got extra money because now I'm married. Try to live off of one spouse's, or as much off of one or 1.5 of the spouse's income, so you can bank and save money, because home ownership requires an investment. You're asking a lender to give you $200,000, $300,000, $400,000, $500,000. You're going to have some funds invested into it, especially in this market. If you go to a new construction subdivision, and they're offering $10,000, $15,000, $20,000 in incentives, they're not going to give you down payment assistance. So going into a new construction subdivision, think you're going to get down payment assistance, and they give you $20,000, it's not going to work. So you're going to, even though if they pay $20,000 for the down payment, for the closing costs, you're going to have to pay for the down payment. Very rare that you see anything where you're going to get both. Again, guys, it's mindset and wanting to do it and preparing for it. If you're not educated about it, the first step you should take is speak to a lender. He or she, or preferably me, could give you a game plan on how to position yourself for home ownership. We look at time and we get discouraged, right? Just think 3 years ago, it was 2020, and the pandemic hit. And it seemed like yesterday, right? So time goes by pretty quickly. You definitely want to see what you can do, position yourself. I talked about in one of my videos about getting a second job. If you need to get a second job, cool. But make sure you're utilizing the second job to save or pay down debt. You don't want to take on more debt because you have two jobs. Now, I've seen some situations where, depending on where you live, you need two jobs to live, and I get it, right? But there's still some things that we can cut back on. Even if it's $100 a month, that's $100 extra you save. A lot of people's funds get eaten up in food, cooking at home, and not going out as much. So there's so many opportunities that we can have. If you are watching this and you're not subscribed to my channel, please do me a huge favor. Give me a thumbs up, subscribe to the channel. Go back, take a look at some of the other videos. I have videos on USDA, FHA, VA, student loans, the process on purchasing a home, interest rates, student loan debt. So we have so many different topics. We also offer a step-by-step home buyer's guide that's free. The link will be below. You click on the home buyer's guide. It'll walk you from A to Z through the process, along with scheduling a consultation with me. Hey guys, listen, I'm gonna be honest. Sometimes I get bombarded with calls and files. Charge it to my head, not to my heart. I will try to get back to you. My team will try to get back to you as fast as possible. But in saying that, and this is very important, when you go to a lender, fill the application out as completely as possible. Take your time and put as much information as you can. That will help us get through the process faster and not have to have as many questions, right? If a lender asks you for your documentation, provide them with all pieces of documentation, because if you have a complete application with documentation and things filled in, it makes the process easier and go faster. It definitely helps us as a lender. So it allows for us to get through things. If you're getting ready to, if you're looking to talk to me or apply, listen, get together your financial documents, 30 days pay stubs, figure out how to get them offline. No pictures, no screenshots. Last 2 years of W-2s and 1099s. If you don't have them, reach out to your employer to get a copy. If you can't get a copy from your employer, go on irs.gov and get your wages and income transcripts. Those are totally different than your tax transcripts. If you're self-employed, go to that same website and get a copy of your last 2 years of tax returns, right? If you got your tax return somewhere or someone prepared them for you and you don't have them, reach out to them and get them. Bank statements. We need the last 2 months of bank statements, most recent. So here we are in June. So we need May and April. March and February don't work because they're not the most recent. All of these small things help us get through the process smoother. It helps for a smoother transition. Filling out the application. If you have multiple jobs in the last 2 years, put every one of them down, because we're going to find out about it. Put every job down, as much information as you can, the human resource person, the phone number, the address, your position, your times there. All of this stuff helps the lender get through your file faster and helps them be able to help you. So if you help me help you, it makes it better. Kanisha says, I'm looking to purchase a new build. Should I look at a resale just to get my foot in the door? Depends on what you qualify for. We'll talk. I need to talk to you off camera, but it just depends on where you at and location. And I know some people that are looking to purchase, they can't afford where they live and they're willing to go to another state. That's an option too if you have the income or can work remotely. I'm already paying $3,000 a month rent. I live in Maryland. The deposit is holding me back. Whenever I look into a program, I don't qualify at my income. I am licensed in Maryland. I have some nationwide programs that could potentially help you with the down payment as long as you have the closing costs. Reach out to me and let's see how me and my team can help you. That's a great quote, Aaron. Be your own reparations. No one's coming to save us. We got this. Let's get it. That's right. All right, Miss Jones, have a good one. FC, I appreciate you for coming on the live. Hey, guys, if you know anybody in the United States of America who is looking to purchase a home, this is my shameless plug. My team and I can help you in 46 states. The states that my team and I can't help you in, I have someone who can help you in. Don't let not knowing a lender or a realtor stop you from applying. Reach out to me, get a consultation. Doesn't cost to talk to me or a consultation. If you're on my calendar, you're my focus, right? You're my focus. I focus on that time. If we set aside 30 minutes for me to talk to you, that's what we're going to talk about. We're going to talk about getting you in position for home ownership. If you know anybody that's looking, share this live out to them. Share my channel with them. I think we have great and valuable information on how to become a homeowner. Again, we try to go live as frequently as possible, typically Thursdays at 7, but because today's Monday and everybody's at home, I hope, and it's Juneteenth, I wanted to make sure I did a special live. Hit the notification button so you know when I'm going live. Chime in. Anything you guys want to know about. If it's too personal to put in the chat, definitely reach out to me and get a consultation with me and my team. Ivy, I do have some. We need to get together. Let's talk this week, Ivory. I'm sorry, I keep calling you Ivory. Ivory, let's get together this week. Okay, Miss One, send me another email, and we can touch bases. Hey guys, do me a huge favor. Give me a thumbs up. Also, I want to make sure if there's a topic you would like for myself to touch on, drop it in the comments, send me a message. Some of these topics that I'm starting to talk about are topics that people are interested in. Again, if you're just joining my live, we're talking about the importance of home ownership in the Black community. The obstacles that we had years ago where we couldn't own a home, and the fact that we now own less land than we did 50 years ago. I'm not saying it because I heard someone else say it. It's a fact. It's a fact that we own less land than we did 50 years ago, right? So we need to figure out how we can own more properties. Listen, we can get into, you don't necessarily, and I'm gonna say this, you don't necessarily need to spend $10, $20, $30,000 to buy a course on how to buy an investment property. You can slow roll it. Buy one property, live in it, rent it out, buy another property, live in it. It's not a race, it's a marathon. Think about it. If you buy one property a year. In 10 years, you'll have 10 properties. I think that in order to get into the game, you need to be able to manage and figure out a system for one property before you go to additional properties. So make sure the easiest way to get into owning property is a primary residence. And once you own and you have primary residence, then you can strategize with a knowledgeable lender and strategize how to get it to the next property. So again, guys, home ownership is important in the Black community. We were not left thousands and thousands of acres of land. We had thousands and thousands of acres of land in cities destroyed and taken away from us. If it's not important, they would have never took it from us. So now it's our opportunity to build, to continue to figure out how to make this work. First step, buy a house for you to live in. Doesn't have to be your dream house. Doesn't have to be your forever house. Doesn't matter if you're a single woman. Doesn't matter if you're a single man. I don't care if you're 85, 95 years old. If you own a house, you have the opportunity to, as long as you qualify. And on that note, I'm Kevin Jefferson, the People's Lender. Have a great day.